Hello, hello, good evening to everyone. Okay, we will start in about 2 more minutes. So we wait for more people to come in first, then we'll continue. Hi Ming Lee, good evening. Thanks for joining our Facebook Live today. Okay, let me do a simple sound check. Okay, can everyone hear me clearly? Just type yes in the comment box. Hi Diana, good evening. Thanks for joining us today. Okay, great. So it seems like my sound is working clearly. Okay, we will start in about another 1 or 2 minutes. Just wait for more people to come in so they won't miss out anything. To our audience out there, thanks for spending time to learn something new, especially on this pandemic moment where you can spend some time at home, at the comfort of your own home to learn something new. Okay, so let's start. Hello and good evening to everyone that's currently tuned in live with us on today's Facebook Live. I'm your host for today, and my name is Trent. I'm a marketing executive from Phillip Futures, and with me here today is my colleague William, a senior marketing executive from Phillip Futures. So how are you today, William?
Very good, Trent. Thank you. How about you?
Yeah, same. I'm feeling good today. Exciting for what you're going to share later.
Yeah.
So in today's Facebook Live, we'll be sharing on the topic optimizing your portfolio returns using NYSE and NASDAQ share CFD. Okay, before we get started, there's 2 things I want all of you to help me, okay, all of our audience to help me out. So firstly, I will need your help to hit the share button and share it to all your friends. Okay, so don't be stingy and just share this wonderful opportunity to learn something new to all your friends. Okay, secondly, if you have any question, just don't be shy to ask. All you have to do is just type in the comment box below and I will ask William to answer them. Okay, so without further ado, let's jump into our topic for today. So pass on to you, William.
Okay. Thank you very much, Trent. Okay, so first of all, like Trent said, thank you very much for your time joining us tonight. And I'm excited to share what I know, especially on the third part, okay, which is how to identify a very good risk to reward setup, okay, in your chart by incorporating volume into our analysis. All right, but before that, just a very quick disclaimer. Whatever that I'm going to share tonight is only for knowledge sharing and it doesn't really constitute any buy or sell advice. Okay, so our sharing tonight will be in 3 parts. The first part will be on how does US share CFD works. Okay, the second part is why should you trade US CFD, and the last part is to identify a low risk high reward setup with volatility contraction pattern. Okay, so basically this pattern will allow us to incorporate volume to understand supply and demand, okay, for us to really find a good entry point. Okay, let's start with what is CFD. So before we trade this product, we need to at least know what is it. Okay, so CFD in short is a derivative. Okay, derivative in layman terms is actually a leverage product or leverage trading. So CFD is actually a one of the very most common and also most cost-effective way to trade the US market, okay, or to trade the financial market. As long as you have a proper strategy, this is the best product for you to trade because you do not need a lot of capital to trade it. Okay, in CFD trading, you do not own the stocks that you trade. Although you don't own it, you do not own it is because the agreement of the contract, we call it a contract, okay? The agreement between the contract is between the investor, which is you, and our company. So exchange in general do not involve in this trading, okay? But the price that you trade with us, with our Phillip Futures CFD, it will be according to the exchange, although the exchange is not involved, okay? So yeah, in general, yeah, this is a derivative trading and it allows you to short the market as well. So you can short the stocks. If you reckon the trend of the stocks has banged, okay, it's going to enter a bull zone, then you can start to short it. This is something that you can't do in a stock market, okay? Yeah, this is a very quick introduction on what is CFD. Now, how does this particular product work at our company? So first of all, let's talk about the margin. So for you to trade US CFD, okay, the margin required is only between 20% to 60%, depend on what stocks you are going to trade. So the very famous, the FANG stock, FAANG, okay, all these famous stocks most of them are the margin is around 20%. So you do not need to fork out a lot of money to trade them. Okay, so I'll give you an example. So if today you want to buy 1 unit of Amazon shares, if you want to buy 1 unit, the current price, assuming is around $3,300 US dollar. So in your normal traditional broker US account, you need to pay 100%, which is 3,300 USD to own that 1 single unit. With our Phillip Futures CFD account, you just need 20%. So meaning to say 20% of 3,300 is only 660. With 660 US dollar, you can own 1 unit of Amazon. Okay, so basically our product increase your profit and losses, it magnify your profit and losses. Okay, so this is the example that I gave you just now. Okay, so assuming that you are so this is the example. So assuming that you are owning one unit of Amazon shares at 3,300, basically in your cash upfront broker account you need 3,300. So with our CFD account you just need 660. So the second part you need to understand is the commission. Okay, so for commission we are charging 0.5% or minimum USD $15 per transaction. So in short, it seems the 0.5% can seem a bit high, okay, but actually it's not, because in a lot of other brokers in Malaysia, they are actually charging a minimum of 25 US dollar or US dollar 30 or 30 US dollar minimum commission. So actually, in fact, I reckon we are quite competitive in terms of brokerage. And second part of the charges will be on the finance cost. So for you to long a position, because this is a leverage product, okay, so the finance cost to long a position is 4.5% per annum based on everyday closing price. Or if you want to short a stock, the finance cost will be 4% per annum based on everyday closing price. Now, this is a very quick one on how to calculate the finance cost. Okay, assuming that today you are, like I mentioned earlier, you want to buy 1 unit. You want to buy 1 unit of the Amazon at 3,300 US dollar. That is the contract value. But with our CFD, you just need 660. So at 0.5%, the commission is $16.50. Okay, $16.50 USD. Now for finance cost, this is per day. Okay, this is per day. So it will be 4.5% times 300 US dollar divide with 365 days. So the finance cost is only 41 cents per day. Okay, this is based on everyday closing price. So basically that is how all the costs that is involved in this particular CFD trading. Okay, overall it's not like super expensive on the US stocks. So let's just look at a profit scenario. Okay, let's just do some example. So if today you trade one lot of Amazon at 3,300, okay, and the price increased to 3,500, okay, the price increased by 200. So remember, in your normal stock account, if the price go up from 3,003 to 3,005, you make a profit of 200 bucks, right? So after you deduct all the costs, you probably left with 172 bucks. Okay, 172. That's about 5% of your return. With our CFD, you just need 660, as I mentioned earlier, 660, in order for you to own that 1 unit of Amazon shares. If today the price of the Amazon increased from 3,300 to 3,500, you make a profit of 200, right? Okay, deduct all the costs involved, including the finance cost, you will still left with $161. Okay, $161. But remember, initially you only put in 660 to trade that single unit of Amazon. So your return is how much? 161 over 660, your return is almost 25%. Do you see the difference? Okay, with the same amount of risk, but you actually magnify your profit. Okay, you magnify your profit. Now, let's look at a loss scenario. Okay, so if today you are buying 1 unit at 330 and the price actually dropped to 3,100, you lost how much? 200 bucks, right? You lost 200 bucks. So overall, in your normal stocks trading, you will lose, including the brokerage and stuff, you will lose about $235. Okay, that's about 6% of losses. Now, in our CFD trading, you lost 200 as well. So including all the costs, including the finance cost, you will lose 236. Okay, it's 10 bucks more than the usual stocks. Is due to the finance cost, because in CFD trading you actually trade with a leverage, so you will incur this finance cost. So with that additional cost incurred, you actually lost 236, which is 10 bucks more than the normal stock account. Okay, the return in equity, the return on equity is 35. The loss on equity is 35%. However, your losses is actually about the same. So regardless whether you are trading the US CFD with us or you are trading the normal CFD at your cash upfront account, your losses is pretty similar, except the fact that with 3,300 USD in your account, you can trade multiple stocks. So basically, you can put your money in different baskets instead of every 3,000 US dollar into one single basket. Okay, you can diversify your portfolio better. This is why this is the advantages and also the benefits that we can offer you. So, okay, now why trade with our company, Phillip Futures? There are a lot of CFD providers outside, okay, especially a foreign broker, okay, on the internet. When you Google or when you go to whatever website, there are so many advertisements popping up asking you to trade the CFD, the stock CFD. So how do we or our company differentiate ourselves compared to those broker? Okay, this is what we can offer you. The first one is short selling. Okay, short selling. So in normal stocks market, you can't short a stock, but with our CFD account, you may short a stock as long as you think the trend has bent or has turned down trend. You can short a stock and profit from it. You can profit from bear and bull market. Second, you can use your capital really effectively. Like I said earlier, you just with 3,300 USD in your account, you can put it in multiple different counters, different companies, okay, in different basket instead of all in one. Okay. The third one, this is how we really differentiate ourselves to a foreign broker. If you trade CFD with a foreign broker or foreign broker, most likely the price that you trade will not be the same with the exchange. Basically, the we call the broker house as a market maker, meaning they will adjust the bid and ask price with their system, okay, with their system, because it's not the same with the exchange. So they will adjust it and place the bid and ask price all by themselves. But for ourselves, for our company, the bid and ask price that you trade will be totally 100% similar to the exchange. So we don't adjust the price ourselves. We don't do that. Everything is based on the real supply and demand in the market. Okay. The fourth one, our company, we do let our clients entitle the common corporate action, such as bonus issue. Okay, if a stock is giving bonus issue, yes, you entitle for it. Share split, you entitle for it. Dividend, okay, this is something a lot of people want it. Dividend, we entitle for it. Okay, you will get your dividends still. Okay, but it is subject to US tax. Okay, so but still you get your dividend. Okay, the only thing that we don't really cater will be something like right issue. Okay, right issue will suspend the stock. We don't cater it. But most of the common corporate action, yes, we allow our client to entitle it. Okay, the fifth point here will be competitive brokerage. Okay, to be honest, our CFD account compared to a cash upfront account, our brokerage is not too much expensive compared to them. It's probably just 0.1%. I reckon if you ask the cash account outside, they are probably charging you 0.35, 0.3, 0.4, somewhere there. We are charging 0.5. And right now we are doing a promotion for 3 months until end of March. Okay, you can trade USDFD with 0.3% of the brokerage. There are still 2 months to go. Okay, you can ask us about it. You can PM us or message us. We can let you know everything about it. Okay, our brokerage is actually quite competitive. And the last point, which is very important, you are trading the US market at night. Okay, we offer 24 hours support. So if you have any questions, you have any problems with our platform, with anything, you can call in to ask us. I believe this is something that foreign broker is a bit hard to support you, but yes, we have 24 hours support. Okay, even if you want to call in to place order, you can feel free to do that. We don't charge you extra as well. Okay, yeah, just a very quick one to run through the difference between CFD and stocks. Okay, first is the ownership. Like I said in the first point, you do not own a stocks in CFD trading, but in real stocks, yes, you own the stocks. Okay, second point is the dividend. Okay, like I said, CFD trading, you get your dividend. Okay, the only difference is you do not have the voting rights. Okay, in stocks, you are the shareholder and you get your voting rights and the dividend, of course. So margin trading in CFD, yes, we are giving you leverage, so you can put your money in different baskets with the same amount of money that you need to put in one single stock in your normal cash upfront cash stock account. So the fourth one, CFD allows you to go both long and short, but for stocks, you can only make profit if the markets go up. Okay, so overnight financing, yes, CFD, we charge you for that because you are trading with the leverage. Stocks, you fully put the money in, so there is no overnight financing. And CFD do not have stamp duty, okay, because you do not trade through the exchange. Only if you trade through the exchange, then the exchange will charge you the stamp duty. Okay, so yeah, basically these are the difference between CFD and a stocks. Is there any questions on the mechanism? Before I move on to the second part, probably if you have any questions, you can ask me. Okay.
Yeah. On the mechanism. Yeah, let's take a short break and just let our audience digest some information, the information that you share, William. So we have one question here from Paul. Okay. This CFD at least trade 1 lot or can trade 0.1 lot?
Okay, for our CFD, the minimum for our clients to buy is 1 unit. Okay. However, with the leverage, like I mentioned earlier, Amazon, the share price is how much? It's 3,300. You just need 20% of it. Facebook, how much is per unit? Is about 200. Okay, I will just use 200. So 20% of 200 is $40 USD. You can trade 1 single unit. Yeah. So you do not need a lot of money to trade it. We don't give fractional share, but minimum is 1 unit, but with fractional margin.
Yep. Okay, thanks, William. So another question from Paul also. If we are entitled with dividend, can we enter the market just right before dividend release and still entitled for the dividend?
Okay, for this one, you need to enter the market 2 days before the dividend at stake in order for you to entitle it. Okay, at a minimum of 2 days in advance. If you enter the day before, you might not be entitled for it. Yeah, 2 days in advance.
Okay, so Paul, does that answer your question? Okay, to our other audience, keep the question rolling. So we'll answer your question from time to time. We'll take a short break and answer your question from time to time. So so that's all for the question that we have currently. You may continue, William.
Okay, so if you are too shy, you can just PM us to let you know more about it as well. Okay. Okay, now let's move on to the second part of what I want to share, which is identify a low risk, high reward setup using volatility contraction pattern. Okay, in short, we call it the VCP. Now, I'm not sure how many of you actually come across this word, volatility contraction pattern. It sounds very complicated in a way, but it's actually, if you understand the word of it, is actually, there's a meaning. Volatility meaning the high and low, how high and how low the stocks, the price can swing. Okay, how low and how high the price can swing. So contraction meaning is like against it. So the contraction meaning the volatility is going to get smaller and smaller. This is the meaning behind it. And this particular method is actually invented by this person called the Mark Minervini. Okay, so Mark Minervini also wrote a book called How to Trade the Stock Market Like a Stock Market Wizard. Okay, if you want the book, I actually have the ebook, but you can email me personally to email it to you if you really want to read deeper about this particular method. Okay, he writes a bit in depth in a book. Okay, so VCP is actually for us to understand the relationship between a supply and demand. Okay, so basically we always talk about resistance and support. So resistance, what is a resistance? So resistance is like a supply, because if the price can't go up, meaning there's too many people wanting to sell. So that is where the supply comes in. So the price will drop. So it helps you to understand the supply, which is the resistance, and the support. So support meaning if the price doesn't drop below it anymore, meaning there's a lot of people wanting to buy the stocks at that particular price. Hence, the price do not drop below the support anymore. That is the demand zone. So we call supply and demand. So basically, VCP helps us to understand the relationship between supply and demand, and also to identify. We always know that there's a resistance. So there's a resistance here. So which of the resistance has the least resistance for us to enter, for it to break out? So this is what we want to identify using this particular method. Okay, so the third one, it tells us that this particular pattern, it tells us that when the stock is moving in a sideways, is it under accumulation stage? Accumulation meaning the big players or the strong investors, they are trying to buy the stocks bits by bits without your notice. They are accumulating until most of the shares is actually in their hands before they make a push. Okay, is it under accumulation or is it under distribution? Distribution meaning to say that the big players or the strong investors, they are slowly releasing their shares to the retailers. So you buy the expensive stuff from their hands. Okay, so you need to understand. After you understand the supply and demand, then only this method, incorporating the volume, you can tell whether is it under accumulation or is it under distribution. Okay, now the fourth point, which is the character of it. So basically, the character of it is that it needs to move in sideways, accompanied with a volume string significantly without breaking that sideways. Okay, if you identify something like this, the volume, the supply demand, then you can fully understand it. Okay, this is the volume shrinking significantly. Okay, where you can really notice it is one of the character of it. Okay, last point, VCP, most of the time they are trading at a new high or a 52 weeks high. Okay, or at least a minimum requirement, it needs to be trading above the 20 days moving average or at least above the 50 days moving average. So if it is trading above a 50 days moving average, meaning to say what? Meaning to say people who enter these stocks in the past 50 days everyone is making money. So when everyone is making money, it tends for the stocks to go higher and higher, okay, because it is not hitting anyone's stop loss. When it is not hitting anyone's stop loss, because in the past 50 days, as long as you buy, you are making money. So if it is not hitting stop loss, it's very unlikely for the price to come down. Okay, so these are the pattern in short. Okay, now let's look at some a bit in depth. First is the footprint. Okay, what kind of footprint do we want to identify? So first of all, first question you need to ask yourself is the time. How many days or how many weeks or how many months has passed since it started to do the base? Okay, how many times? You see, so this is it can from here to here. Okay, it can be days, it can be weeks, it can be months, can be 6 months, can be 6 weeks. You know, it can be even longer than 6 months. Okay, it depends what kind of stocks. Some stocks it can took them years for them to do a base before you can identify the best entry, and then it only explode. Okay. Second question you need to ask yourself: the price. How deep was the correction and how narrow was the pullback at the right price? You see, the first pullback it can be 31%. Okay, bounce to here. The second pullback can be 17%. You see the volatility here starts to contract, meaning start to reduce, you see. And then the third pullback, it comes up, the third pullback is only 8%. When the pullback is getting smaller, meaning what? Meaning the seller is starting to reduce. First information that we get, okay, seller is starting to reduce. What else? Buyers is willing to pay for higher price. So the demand starts to go up, okay, demand starts to go up. So basically, sellers reducing, buyers is willing to pay higher and higher, which is why you see the volatility starts getting smaller and smaller. Okay, and the last question is the symmetry. Okay, how many contraction does it go throughout the whole basing process? For this particular one, I think there isn't a fixed one. It can be just two wave and then go up. It can be 3 wave. It can be more than that. Okay, it can be more than that. Okay, so now let's look at an example. This is a stock called Palantir, which is one of the very famous IPO in 2020. Okay, very famous IPO in the US. Okay, so if you look at this particular stock, we use the first footprint that I shared very earlier. Okay, if you see the first swing, how many percent? 37%. Swing up, the second swing, how many percent? 28%. You can see the demand starting to, the supply starting to reduce. The seller is getting lesser. How about the third swing? The third swing is 12%. Obviously, you can see that the volatility started to contract. Now, just by this particular method, the volatility contraction, it doesn't really tell you, oh, is this the least resistant area? No, it doesn't. It doesn't tell you the relationship between supply and demand yet, which is we move into the next one. Understanding the supply issue. Okay, we need to understand the supply. Why does the supply comes in? Why? This particular understanding this will help you to understand which particular spot has the less resistance for us to enter, and then it break up. Okay. Now, group one. This is the first group of people. Okay. This is Okay. This is the first group of people. This group of people, they like to chase high. Okay, they like to chase high. So they enter probably here. Okay, they enter here. So from here to here, it can be 6 months, it can be 3 months, it can be 9 months. Imagine you got trapped inside this particular stock. You enter here, you got trapped until here for 9 months or 12 months. Imagine that, 12 months, you got trapped inside here. And from here to here, it can be 50% losses, it can be 30% losses, depends, okay? Imagine you lost 50% and suddenly the price go up after 1 year, back to your cost. What do you want to do? You can't wait to sell. Definitely you can't wait to sell, even to sell at no loss, because you got trapped inside for 1 year already. Okay, you will sell. So you sell here. This is, if first reach here, you sell. Okay. Now, second group of people, they tend to buy either here. Okay, some people, they just buy, they're lucky, they buy it here, rock bottom, we call it the rock bottom. Okay, some people, they use the higher high theory to buy it. Okay, they use the higher high theory to buy it, so they might buy it here. Okay, so these two groups of people, they belongs to the group 2. Okay, they bottom fish, they accumulate, and then they have some handsome profit. Okay, they have some handsome profit, but still, they still understand that this is the resistance. So when you reach a resistance, what people do? People tend to dispose. So it dispose. Okay. So these two group of people, they tend to dispose. So dispose, the price go down. So if a lot of people is disposing, by right, the price should continue to go down. Okay. By right, the price should continue to go down, but it didn't. People start to come in to accumulate. Okay. People start to come in to accumulate. So again, once again, it hit the resistance one more time, another resistance, but at this particular resistance, what do you see? You see the volume here. The volume starts to reduce, the contraction. Okay, moment you see the shrinking or a disappearing of volume, it tells you one single information: the supply has gone, supply has disappeared. Okay, the supply has gone. So when no one is selling, the swing becomes even smaller. This is the moment, this is where VCP wants you to enter, because the supply has gone. So basically, if they want to push, really easy for them to push, because whoever they want to sell, they has already fully disposed their shares. So very easy for them to push. Let's look at the example using the same stocks Palantir. Okay, do you see the very significant reducing in volume at this particular zone? Okay, this entire particular zone, you can obviously see that the volume in general is decreasing from here to here. It's quite significant or very easy for you to notice it. Can you see it? On certain stocks, you can see just a few candlesticks, especially even in Malaysia market. I've been noticing it for many times, that as long as you see that the volatility start to reduce, the volume suddenly disappeared, you can just very obviously see that the volume just dropped by one particular level. Basically, it tells you that the supply has almost gone. Okay, so what happened next? And there is one more signal here. Usually we talk about entering when a resistance turns into a support. So this particular place here, if you look at it, this used to be a support. Okay, then it turns into a resistance. It just can't go it. Then after that, suddenly it goes up. It turns this particular level into a support again. Then couple with what? Couple with the disappearing of volume. So the disappearing of volume coupled with the reduction of the volatility, it tells you that the supply has almost gone. Okay, so when this happens, it's basically very easy for them to push a single stocks to really let it fly. Okay, we call the explosive move. Okay, this is what we want to identify. Okay, so generally, or in short, okay, I'm not sure whether I'm moving a bit fast because this is the summary already. But if I am moving too fast, you can still ask me question. Okay, just type in the comment box below. Okay, so I will just do a very quick summary on this whole thing, the volatility contraction pattern. First, the stocks must be trading at least 52 weeks high or all-time high, or a minimum requirement is also the stocks needs to be moving above the 20 days and also the 50 days moving average. If it is above 200 days, even better. Okay, because this is what the stocks meant to be. Okay, the strong hand, 200 days, meaning in the past 200 days, as long as you buy a stocks, you are making money. So it's almost 1 year, you are making money. So this is something very happy for everyone. Okay. Second, when the price of the stock is moving in consolidation or sideways, okay, it's moving in sideways, the volatility or the price action of the pullback, okay, every time it drops, it needs to be reducing. So the volatility will reduce from left to right, like what I shared to you earlier. Okay, this is character number 2. Character number 3, okay, when the price is moving from left to right, okay, in a sideways method, it must be sideways. It cannot be downtrend. If it is in downtrend, then this method doesn't apply anymore. Okay, that is a downtrend stop. Okay, it's not to identify a explosive move. Okay, so when it's moving in consolidation, the trading volume, it must reduce significantly. It must shrink significantly, or at least it's very clear for you to notice it. Oh, the volume already lowered by 1 notch. Okay, so this is character number 3. Okay, and a lot of times, sometimes we identify, okay, the least resistance, and then if you look at this particular image, okay, so usually if you enter at the support area here, where will you put your stop loss? No matter how confident we are with a trade, we still need a stop loss. So how do we place? We still need a stop loss, but where is our stop loss? We enter close to here. Even you enter here, the highest point, let's say the highest point, your maximum losses is still slightly below here, so it's about 13%. That is the maximum, which I usually don't recommend you to enter at the highest lah. We try to say in the middle, okay, 6%, 7% max. Okay, this is how we manage our risk. So this is what I meant by low risk, high reward kind of setup. Okay, so basically, if you can see a volatility that is reducing from 30% to like less than 10%, even if you enter midway of the entire swing, okay, your entire midway, basically your risk is only like 5-6%. It can't be more than 10%. That is all I need to say. It can't be more than 10%. But of course, there are still times that you got washed off and then the stocks move up. So if you see something like a red candle break below the black line, the support line that I drew here, okay, if it breaks below, next day, immediately you see a buying power push it back up again, don't be too afraid to re-enter. This is what I mean by identify your stop loss point. But in the event that the price undercuts the low, okay, you got washed off, okay, this sometimes will definitely happen. It's a shakeout. So if you got washed off, like I said, a red candle breakdown, trigger your stop loss, doesn't matter, just like it triggered. The next day, if you see a buying momentum, push it back up again, enter, re-enter, just re-enter. It doesn't matter. Usually this is that particular shakeout, meaning I tell you the stock is going to explode. That a lot of time I have been monitoring it for many times, even in Bursa Malaysia market. Okay, so don't be too afraid to re-enter, to continue the trend. If it breaks down, there is no buying momentum going up. Great, you cut your stop loss, the price will continue to drop. As long as there is no immediate effect buying up, then the price will drop. So don't be too afraid to set a cut loss saying that, oh, I might get washed out. I'd rather get washed out, because if you don't, if there is something that we don't know, then next day, if it gaps down or some action coming in, boom, another 10%, is too late for you to cut loss. Okay? So yeah, generally, these are the 4 characters that I summarized for this particular method. Okay? So just a very quick shout out that we are actually doing a promotion here on US CFD. Like I shared very earlier, we are only charging 0.3% to trade US stocks until end of March only. Okay, and at the same time, you get to win a lucky draw. Okay, we have iPad, Apple Watch, AirPod for you to, and also cash reward for you to grab. Okay, so if you want to know more how our CFD works, how to trade our CFD, just PM us. We can let you know more about it. Okay, it's a very good time for you to explore this particular product if you want to know more. Yeah, any questions that you guys want to ask? Feel free to ask me anything, even with the trading strategy.
Yeah, thank you, William, for the wonderful sharing on the introduction to CFD, and also some basic strategies on how to get started to trade US share CFD, the volatility contraction pattern. Okay, to our audience out there, if you have any part that you don't understand, you can just this is the time for you to post your question on the comment box. Okay, so let's start off with another question from Paul Chin. So Paul asks, for this CFD trading, are Phillip providing daily review or recommendation for any stock to buy?
Okay, our company, we do give you some research. Okay, we do have research on the companies that our research team has done. We will send you the fundamental information and also the technical part. So we will be sending out on a weekly basis, a few times a week. Yeah.
Yes. So for Paul, yes, we do provide. Then the next question from Paul as well. What is the minimum capital to start this CFD account?
Okay. The capital, I would say, depends on the stocks that you want to buy. Like I said, Facebook is trading at $200, for example. Okay, it's trading at $200. So 20% of 200 is $40. So that is the minimum you need in your account to buy. Okay, but take note on the minimum charges as well, which is $15 USD or 0.5%, whichever is higher. Okay, so like Amazon is $3,300. The 20% will be $660 for you to, in order for you to participate. So really depends on which stocks, and different stocks has different margin. Okay, but the margin is ranging from 20% to 60%. Yeah.
Okay, thank you, William. So another question from Paul as well. Is this CFD account combined with futures account or separate?
It's a separate account actually. So futures is futures, CFD is CFD. Yeah, it's two different accounts.
Okay, so Paul, I hope William is able to answer your question. Okay, then another question from Paul as well. Is CFD only for USA stock or indices also?
For indices, no, we don't offer indexes on CFD, but you can trade US indexes with futures. Okay, we do offer all the like the 3-man US indexes, even the small cap indexes like Russell. We do have them in micro contracts as well, where the margin is kind of, I would say, kind of very affordable for you to trade. Okay, so yeah, if you are interested in indexes, I would say it's better for you to explore the futures. Okay, they allow you to short as well.
Yeah, so basically, US, you want to trade US stock, you can trade through our US shares CFD, and while if you want indices, you can trade through futures. Then another question from Mr. Law here. Should I trade US stock which has high market price?
High market price as in I assume the price is very expensive, like Amazon 3003. To me, if you ask me, it's not about the price, it's about the setup. So as long as the stocks has the kind of setup that you want, low risk, high reward kind of setup, like I shared earlier, it's not about the price, yeah. Okay, as long as you get that kind of setup, yeah, feel free to enter, even if the stock is $3,000. Okay, Amazon price can keep going up and up and up as well. Okay, yeah. So it's not about the price, the high and low of the price, but more on the technical part, the setup. Yeah.
Yeah, basically when there's an opportunity, always grab it.
Yeah,
okay,
yeah.
So another question from Junior. Is trading for small caps more profitable than blue chip companies?
Blue chips, why is a company known as blue chips? Most of the times, blue chips are the very traditional company, like the oil and gas, the telecommunication, you know, this kind of very traditional kind of company. But it is not that whether this kind of blue chips or like Amazon is considered as blue chips. All the indexes stocks are blue chips, like Tesla. It is a blue chip now because it's part of the S&P indexes. Okay, so these are the blue chips. So can you say you can't make money from Tesla? No, you can't say that. So blue chips do have the opportunity to shine as well, as long as the trend is your friend. As long as the setup is right, the trend is your friend, then definitely you can make money from it. There's no saying that blue chips cannot make money, only small cap can make money. Okay, yeah. I hope that answers your question. It's about the trend and the setup. It's never about the price. It's never about whether it's a blue chip or it's a small cap.
Yes, okay, so thanks, William. So another question from Paul as well. Any expiry for CFD like futures?
For CFD, we do not have any expiry date. As long as you have sufficient margin, we call the maintenance margin, which is the 20%. If you are trading like Facebook, 20%, that is the amount you need to always maintain based on the closing price every day. If the price is at Facebook trading at 200, you need 20% of 200. If the price is at 250, you need 20% of 250. As long as you always maintain that, you can just keep holding it. Yeah.
Yeah.
But this techno, you have finance cost lah, interest charges lah. The longer you hold, of course, the higher your interest will be lah.
Yeah. So unlike futures, CFD doesn't have an expiry lah. Okay. Then yeah. So any more question from the audience? Because it seems like the last question is from Paul. Just I mean, this is a good opportunity for you guys to ask questions, so you can learn something new, and also expand your knowledge and stuff.
Yeah, and also just for your information, those who wants to open a futures account, you can feel free to just scan the QR code. Okay, you can do it online. Okay, at your own home. You doesn't need to come to branch anymore. It's MCO now. Yeah.
Yeah. So this online account opening is also open for CFD as well, not just futures. So anyone that are interested to do, you want to open an account but couldn't travel because maybe you cannot travel interstate, or you cannot go to further than 10 kilometers. So I mean, this is your chance to open an account online. And if you have any question, you can type in the comment box below, or just Facebook Messenger us, and our representative will get back to you.
Yeah. Okay. If there is no more questions, I guess that's it. Yeah. Or if you are too shy to ask, you can just private message us lah. Okay.
Okay. So now we have come to an end for today's Facebook Live. I hope everyone. Oh wait, there's another question from Josephine. Quite late. Okay. Is CFD more ideal for shorter term trade since incur daily interest?
I would say it's more of a trading product, but not a product for you to buy and hold forever. A lot of old school investors, I will call them, they like to buy very traditional companies like banking lah, energy stocks lah, and just because it's in a downtrend, they tend to buy it and then they want to hold it. Okay, if you have holding power, you can use your full cash account to hold it. But I won't really recommend you to do it with a CFD account because of the interest. Okay, it's rather if you have the holding power, you use your cash account. CFD is a very good trading product because, like I mentioned very earlier, with 10,000 USD, instead of holding 3 units Amazon, you can hold many different companies. Okay, you can trade many different companies. So with that, you basically diversify your risk. So it's not like one single company that you invest 10,000 USD in. It doesn't work, then you just sink your money, or you just make your money dormant, sitting there dormant. Okay, so basically CFD, it allows you to manage your fund, your portfolio very effectively to maximize your return. But this is all under one single condition, that you have a proper trading system, have a proper SOP for you to trade, so you do not get stuck inside. Okay, yeah.
Yeah. So Josephine, I hope William is able to answer your question. Then we have another question from Paul. If CFD hold on Friday, is it will charge 3-day interest?
Yes.
Asking Saturday, Sunday, is the interest included?
Yeah, because we divide our interest by 365 days. So yes, if you hold it overnight, Saturday and Sunday, you will need to pay interest based on Friday closing price.
Yes. Okay. So, Paul, that's the answer for you. Okay. Let's just wait a bit more for our audience if there's any more question, because we still have a bit of time. Okay. I guess there's no more question from the audience. Okay. Then so we have come to an end for today's Facebook Live. I hope everyone had learned something new about the NYSE and NASDAQ share CFD. If you still have any questions, or maybe suddenly after this you thought of something to ask us, you can send us a message on Facebook Messenger, and our representative will get back to you. So I'll pass, and also you can connect with us through various channels. As on the screen, you can see you can follow us on our Facebook page. Just search Phillip Futures Sdn Bhd. Then you can also follow us on YouTube. So on YouTube, we will upload all the past webinar. So in case you miss out on any webinar, you can just rewind it and learn at a slower pace lah. Okay. Then at on Telegram, we will share all these on the real-time market news as and when it come out about 5 minutes. We will just update on Telegram, and also our latest promotion. And on LinkedIn, we will update some of the market news, the hot market news, and also any of our promotion as well. So basically, we are all over the social media. It's very hard not to find us. It's just a matter of whether you has followed us or not.
Yeah, okay. I guess that's it for tonight, Trent. Thank you. Thank you everyone for joining us tonight. Yeah.
Okay, thanks to our audience as well. Thank you for listening to our Facebook Live, and happy trading for the week. So bye, and hope to see you again on our next Facebook Live.
Okay. Thank you. Thank you. Bye-bye.
Okay, bye. Bye, everyone.